Right, so we've discussed so far about the conceptual framework. We looked at the accounting standard, which is something I've spent virtually most of the time on as I'm having this discussion with you. Then the single entity financial statement for a company, and we've mentioned it, the cash flow statement, the income statement and other comprehensive income, and then also the statement of financial position. These are some of the things that you need to understand. Then we came to the group financial statement. I've mentioned, and let me repeat it in case you forget it or it has skipped you. Make sure you subscribe to my channel on YouTube because I have tons of videos on YouTube that can help you to be able to pass this exam easily, right? And every day I release new videos on YouTube just to help you on various aspects of the subjects that you are preparing for the May 2019 examination. So after we go through these 4 sessions, you remember we now have 70% mark bank. So let's go to the section 5, which is the interpretation of financial statements. So this is what we do with ratio analysis, right? Here the examiner is going to set a 15-mark question on it. Now ratio analysis is one of the areas students get excited about all the time, not only because of the how easy it is, but also because of the fact that they can easily calculate the ratios. But I want to let you know that ratio or interpretation of financial statement is not just about the calculation of the ratios, but it's about the interpretation of the ratios. So if you calculate the ROCE, return on capital employed, for a year and the other year, or you calculate it for the company and they've given you industrial average, or you calculate it for this year and they've given you previous year ROCE, how do you compare? What we see students doing all the time is saying that yes, the amount has reduced or the amount has fallen. The amount has increased. Yes, we can see it, the amount has increased. But what is the main interpretation of that? What is the reason for the reduction? What are the implications of the reduction and what must the company do? That is what we mean by interpretation of financial statement. So you want to make sure that when it comes to the interpretation of the financial statement, not only are you going to be chewing the formula literally, but also you're going to be understanding the things that you are calculating. For instance, if you are calculating the capital employed, you need to look at the fact that what are the elements that you used in the calculation of the